What's up, guys? I'm Jamie Tajera with Property Bear, and this is your September 26th Monday report. I'm Jamie Tajera, co-owner of Property Bear here in Jacksonville, Florida. This is Carrie Hustis, co-owner and sales leader. While Carrie runs all things sales, my day-to-day hunting investments and developments keeps me in two main places. In the field, checking out potential opportunities in construction, or on the computer, researching hyperlocal data. So if you're looking for insight on Jacksonville real estate, you've come to the right place. Thanks for checking out our channel, and if you like it, please be sure to subscribe. All right, let's get into it. First of all, the Jaguars won by being boring and efficient, and I'm here for it. Go Jaguars. So let's do our weekly video for our weekly trend. So sales price on a weekly basis is down 7.5%. And it looks like year over year, we are still up 2.8%. Here's the thing. Congratulations if you sold in July 9th. That was the peak. And I'm just showing you the numbers as they exist. So right now it looks like at 325, we are at the March 2022 numbers, which is still, it's still a big increase no matter how you look at it. I mean, year over year, it's 2.8%. But I think if you go to pre-pandemic, it's still up pretty high. Now, here's the thing. If you're a flipper, this affects you a lot. Because, if you're buying here and you're selling here, it feels a little different. That's an 8% gap on a $300,000 house. That's 30 grand. If you are a homeowner and you bought, I don't know, a year ago, 2 years ago, you're fine. Nothing I would worry about. In fact, I do think that we will see prices go back up, and I talked about it in, I think, the last two videos, but I'm going to talk about it again, especially in a certain price point. So, we've got sales price. Let's go to days on market. Pretty vague explanation of why prices would go up, but they have gone up forever since we've started recording it. Partially because of inflation, but also real estate is it's hard to make more of it, right? So days on market, we are tapering. I mean, we tapered off by a day overall. And yeah, I mean, if you're selling a house, it's going to take a little more than a month to sell it on average. So just keep that in mind. Active inventory, we do break these down for you. I'll do it at the end where we break it down by price point. So active inventory week over week is up about 3.5%, and up overall year over year 86%. So again, that's why it's taking longer to sell houses. You've got more inventory on the market. All right, new pending sales. This is going to tell us where public sentiment is. Last week they released the Association of Home Builders Index, and that went down because nationwide there were a lot less permits pulled. But in our region and in Jacksonville, we actually made a post on our Instagram or something. Our permit number went up, and I'll explain. That kind of ties into the home sales prices going up later kind of thing. So new pending sales week over week is up 16%. Year over year is down 25%. The reason this number is significant is because a year ago we didn't have the same amount of inventory, and yet we're still down. So now we have more inventory and less buyers. And that is probably attributed to this. So we've got 700 to 719, and this is like an estimate. At 300,000, you're talking about 7.5%. So let's look at that. So 300,000, Zillow showing it at 6.5. Let's do it right in the middle. You've got an $1,800 payment with 20% down. Let's make it 0 just so that we know the number, right? So you got 2,400, and I'm actually going to take out PMI, taxes, and insurance. Okay, so just principal and interest. You've got about a $2,000 payment. Well, at 4%, you've got, it's almost $500 less, right? A little more than $500. So that's going to impact demand a lot, right? And it's not so much that it makes it less appealing, it's that a lot of people literally can't afford it. And what puts them in a really bad spot, and this is just a personal opinion with like what the Fed's trying to do, like, yes, attack inflation aggressively. Why? Because it impacts, entry level buyers. It impacts the lowest, income bracket of our country. Well, here's the other side of that. You've now raised interest rates to where the lowest bracket of the country can't. It makes it harder for them to buy a house and build that wealth, right? Whether you want to agree with that or not. I mean, we leveraged our, the first house we ever bought for a lot of money to be able to reinvest it into other things. And a lot of people use that money to buy their next house, and they accumulate wealth that way. That's a very normal standard way of doing things. Now you've got two things that are blocking off the entry point for the lowest level of Americans trying to get in. One, interest rates are so high they can't start building that wealth now, right? And two, the institutions are still buying the houses because they're not getting loans. They're not getting FHA loans to buy these houses, right? And right now, I think the treasury yields are like 4%. It's like, the Tina, there is no alternative. There is an alternative now, and it's paying around 4%. If these funds can give their, can get their investors a 4%, 5% yield, they're still going to buy rentals, on an institutional level, which takes more pieces off the table for those people trying to buy houses. And another thing that is not good is that, so the people who can now not afford this, right, at 7%, they still have to go rent. And what happens is, can they mathematically afford it? Can they make it happen? Yes, they can make it happen, right? But what happens is when you go get a loan from a bank, they're saying, hey, you have to show this amount of income for the past 2 years, blah, 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 blah. When you go rent an apartment complex, which is or an apartment, it's going to cost you the same amount of money, maybe a tiny bit less at this point, but it's going to cost you the same amount of money for the same type of house, which puts you in a situation where not only are you already paying that money, the amount that you're paying, because rents are also inflated, newsflash, but now you can't, start paying something off and building equity that way. So just food for thought. And breaking down the numbers for the different price points. So entry level homes, 0 to 400, you've got 36 days on market. Active inventory went up on 0 to 400s 5%, and year over year it's up 55%. Sounds like a lot. Wait till I get to the next numbers. 400 to 800 days on market's 37 days, right there with the middle. Active inventory went up 1%, and year over year inventory is up 140% for homes between 400 and 800,000. Okay. And now your luxury homes from 800,000 plus. You've got 51 days on market for that category. Your active inventory is up 1%. There's only 690 of those homes, 800 plus, on the market right now. And then year over year inventory in that category is up 127%. That's why that 55% number for 0 to 400 doesn't look that bad compared to the other ones, right? Did we need more inventory on the market? Absolutely. Did we need interest rates to be 7%? No. And then from a cash sales perspective, in each of those categories, so entry level, cash sales were down 4% as a percentage of all the sales. In the move up level, 400 to 800, they're down 3%. And then in the luxury, they're down 22%. The main reason for that is because if you were able to if you were looking at buying, right, and you're kind of seeing, hey, the market is, it's going up, sales prices, blah 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 blah. So you're seeing them kind of go up. You can essentially buy, a higher end property and then turn around in a few months and sell it and you make money, right? You can buy here, you can sell here, you can buy here, you can sell here. Now with it trending downward, it looks a little bit different, right? And honestly, this is exactly what the Federal Reserve wanted. They literally said in their last meeting last week that they wanted to see a pricing correction. Here's the crazy part. Right now, year over year, we're up 2.8% for our area. There are other parts of the country that are down significantly, like double digits. I don't have them pulled up, but I was reading about it over the weekend, and I'm like, we're doing pretty good. We're also in the South. The South is dominating across basically everything: permits, new home starts, home sales, like literally everything. But Jacksonville, is also still on the upswing. With downtown development, so much stuff going on that, um, you know, even though there is no end in sight from the Fed as far as how long they're going to keep raising interest rates, because they're meeting every 6 weeks. We've got two or three more meetings. They want to add another point to that. So if we're adding another point to that, I know it doesn't correlate, dollar for dollar, but let's say they get up to 8%, which again, historically isn't crazy. It's more average, right? You're still up $200 on that payment. At that point, it's kind of too late. They know they've done the damage. They want to get that unemployment up to 5%. That's their goal, to battle inflation, right? Like, okay, we'll sacrifice employment to go from 3 to 5%, as long as eggs don't cost $50, right? That would be bad. And relatively, other countries are doing pretty badly, so we're doing okay. So what I do think is going to happen, though, is we're going to hit this probably 8%, maybe 8.5%, and then the Fed's going to say, okay, like usual, hey, we overdid it for too long, or we didn't do it soon enough, whatever. They drop it, and now you're $500 lower than you were at your peak from an interest level standpoint, and then we begin this whole frenzy again. The housing buying frenzy, whatever. And I think that's what we're going to see. And from an inventory standpoint, that 0 to 400 level is not increasing like everything else is. So it goes up, it sells. Is it selling like tomorrow or like super fast? No, but the problem is some of the sales you're not seeing because a lot of those are going to institutions. So a lot of these new starts and new permits that you're seeing in the 0 to 400 price point are not being built as inventory to put chips on the table. They're basically just being built and being held by the house. So I do think, I don't know, maybe by the end of next year, you'll see another boom in that 0 to 400. But that's your Monday video. If you have any questions or want any specific information about your market, let us know and we'll get it right over to you. Thanks for checking us out.